Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. All right, I am back from the beach. Did a nice 3 days with my wife down Stone Harbor, New Jersey. And, the best part about doing this stuff is you can do it from anywhere. The volatility's been crazy. I did take a few days to unplug from the webcast, and I was still very active in the room, and we put together just a really, really solid week from the beach chair. So 49 yesterday, 51 the day before, 25.5 on Monday, and we'll see what today brings. But it's really about this 5 days, and we talked about this before I left. Just this inability to get through the 50. We tested lower band on the daily overnight on the print of 1775. They ripped that on some China news. And you've just got to understand that you're in a very, very volatile market. Some of the moves are setting up really well. A couple, some of them are really choppy into the inflection points. You can't get if you're day trading this stuff, you can't get too hung up on your entries. It's moving too fast for that. And the nice part is a lot of those entries that would cost you handles in a typical market, as long as you're on the correct side of the freeway, northbound or southbound, a lot of the intricacies of the entries are going to come out in the wash, which is good for newer traders. The problem is you've got to control your risk. We use the same 5-handle disaster stop on a crazy ass, few days like this as we do on a normal day. We do not adjust our risk wider for volatility. That's basically nuts. So, the way we do things and the way I want things is in higher volatility environments, our risk reward actually gets better because our disaster stop number doesn't move. So you see the lower band, it keeps bisecting the 200. There's plenty of long-term inflection points for them to fight over today. The 50 has kind of made up its mind. The daily middle band never really had a chance to get engaged. So the bears, from the original break on July 31st and the retest the following session, they did a hard move down, back up to test the 50. The 50 held. If the bears want to control the remainder of the month into September, you gotta take this out. You gotta take out the 27.75. You gotta do it. You can't be leaving pronounced higher lows because they will take that all the way back up to the daily mid-band. So today, tomorrow, big days for the bears, just from a standpoint of follow through. We've had fireworks. Now you need some persistent downside action in order to make that work. Hourly chart. So, the weekly pivot, they had a nice test early in the week. They chopped it up, and then they really just steadily dumped it on Wednesday. Back up to test here. You can see the test of the daily lower band. But after this verdict into a potential lower high, you need to see some follow through down below 1775. Not necessarily today, but today, tomorrow, Monday, you've got to get back down to that 27.75. You have to do it. If you want sustainable bearish action that's more than just gigantic candles that get rejected. Okay? The bulls want the opposite. They would like the daily lower band to hold. Not just for today, but, they want to be able to look back on this Sunday night into Monday and say, okay, well, they brought it back down. Sure, the 50 was resistance. They tested the daily lower band. Now that's held. So I've told you guys for years, how does the E-mini trade? How does the S&P 500 trade with the Bollinger Bands? Lower band, middle band, upper band. Upper band, middle band, lower band. What's next? Middle band. The only way to avoid that for the bears is to start living below there and eventually take out that 27.75. So being away for 3 or 4 days, I wanted to give you guys a pretty, high altitude view of where I see all this, and that's basically what it is. For the open today, 48's the deal. You got the hourly mid-band, 49.89. You've got volume weighted average price, 48.81. So that's migrated up a handle. So 49 is the deal. You want to be long above, you want to be short below. They came down to test that area, 820, and then again at 840 it held. The bulls want to take out 72, get back up into a test of the weekly pivot, and see if they can close above it today. All right, everybody. Have a fantastic day. More stuff out on social. Come check out the room. Come trade this stuff with us. You will not be disappointed. Take care. See you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.